All right, let's start off with some of the big names you have here. You have a buy rating on Amazon, Walmart, and Target. So my question to you is, how do they fend off, if this is true, that consumers aren't spending as much on things that they don't really need? When it comes to Walmart in particular, they have a really huge grocery business, more than 50% of revenue, but that's really low margin. If people aren't going in there and buying other stuff besides grocery, how does Walmart continue to do well?
I mean, you got a couple things going on. First is almost a natural switch back to services and getting out there. And so that's kind of been a natural thing we've been seeing. So you get a little bit of that. But the real challenge we're seeing is almost like a crowding out effect. And this is particularly at the low end. I mean, if you look at what's going on with inflation, I mean, it's crazy. We've been talking about this with both our buy-side clients, but also we have a big consulting business. We're talking about it with them. There's a lot of fear out there with what's going on with food, utilities and rent. I mean, you're talking about income, households with income under 52,000. You're seeing their basic items go up. And we think the government numbers are a little bit off and off in the low end. So you're seeing some of these basic things go up 20%. This is putting an enormous amount of strain on some of these households. And it's putting a lot of fear into people like a Walmart or a Dollar General. But even some of the supermarket guys that I talked to, volumes have now turned negative. And then you mentioned discretionary. I mean, discretionary is almost like panic.
So I want to look at some of the other stocks you talk about. And just in general, You're saying that e-commerce is really, I guess it's matured. It's certainly not down. It's higher than it was pre-pandemic. But the growth rates that we saw, they're just not going to happen anymore. I was interested in the fact that you had Amazon, Target, and Walmart as a buy, but Costco as a hold. I don't really think of Costco as a .com retailer or an e-commerce retailer. I really feel like you go into the store. I know they have a grocery delivery business, but the other three that you have a buy on, they're really pushing into e-commerce. So are they going to be hurt by this trend, or are they going to be helped by people going back to the store?
Well, I mean, I think if you look at Costco specifically, I mean, that's one of the best retailers globally. We had a buy on it for a long time. Our thought about Costco, it's like a great athlete. It's just the best in class. Think like a Michael Jordan. But in the business, I had a great mentor. His name is Barclay Perry. He always said, you trim all the way up. So we didn't tell people to necessarily sell Costco, but taking some profits when it was up near 600s, 575 made a ton of sense. As far as the other guys, kind of our big focus at R5 has been companies with specific initiatives that can drive better earnings than people are thinking. But we've also had a big, we've been looking more at valuation compared to maybe we had in the past. Although we always took it seriously. So if you look at like a Target, Target is what we think is one of the more undervalued retailers. It's one of our top picks for 2022. And clearly they're what we call an omni-channel superhero. They have great store pickup. They have, they own Shipt. Target, Brian Cornell, who's just one of the best executives that I've actually worked with over a long period of time, he's really, and his team have really transformed that organization over the last 7 years. And we just don't think they get 7, 8 years. We don't think they get the credit they deserve. Walmart's more of a safety play. Although we do have concerns with that low-end consumer, or lower end, middle, that they're under a lot of strain. So we do worry about the non-grocery business at Walmart, that you could start backing up some of that discretionary spending and product, depending on how that consumer holds in.
All right, I got to touch on a few pandemic darlings. Wayfair down 26% at 52-week low. Etsy down 17%. Shopify down 15% after some week forward guidance. Are we just not going to buy things from these online retailers? You said that people want to go back to the store. Is this a permanent trend that's going to continue to hurt these companies?
No, I mean, we're going to have a period of consolidation because, everyone was buying everything online. I mean, if you look at Amazon, the biggest in the business, I mean, you pulled forward huge amounts of revenues. They've grown their business tremendously. The biggest issue we actually see is that expenses are out of control. This is most demonstrated, I think, by Amazon. I mean, they built an enormous network and, fuel's up a ton. You got labor costs up significantly. What people don't realize is a lot of these e-com facilities, these distribution facilities, they use a ton of labor, an absolute ton of labor. You got 2,500 people employed there. And so there are definitely big challenges, and expenses are clearly hurting them. And then, of course, we have the natural reversion here as we digest a lot of growth. And then you look at someone like a Wayfair, someone dealing with a lot of discretionary items. I mean, housing, again, concerns. We've had such an increase in home prices. You look at like a Charleston, South Carolina, I mean, things that were selling for $600,000 are now 1.2 million on the market again 18 months later. Things in Florida, same thing. So we have some, we definitely have some issues in those types of names, discretionary names. Housing, is demand going to hold up? But generally speaking, it's an expense issue and a digestion issue. Not that these businesses are, done.